Let us now look at a comprehensive problem which will encompass many of the things which we have seen through the last 15 set of videos on admission of a partner. If you haven't had a chance to go through them, you can just go through this playlist to get more hang around those questions. X and Y were sharing partners in a firm, sharing profits in the ratio of 3:2. So they were sharing profits and losses in the ratio of 3/5 and 2/5. On 31st March 2016, their balance sheet was as follows. On the liability side, you have sundry creditor, bill payable, workman compensation, profit and loss account, and capital account of the partners. Then you have land, machinery, stock, debtors, cash, and all. Let's look at what is given in terms of the information. This is a fairly standard balance sheet, which is appearing here. On the above date, Z was admitted as a new partner in the firm for 1/4 share in profits on the following terms. Z will bring in 1,20,000 as his capital and 20,000 for his share of premium of goodwill. Machinery to be depreciated by 10% and land and building was to be appreciated by 30,000. Stock was overvalued by 20,000, which means the value which is given is higher than the fair value by rupees 20,000. A provision of 5% was to be created for doubtful debts. Okay, we'll do that. Salary outstanding was rupees 5,000. It's an unrecorded liability. The liability of workman compensation reserve was determined to be 8,000. So there's a workman compensation reserve which is there for 10,000, right? They are saying that actually instead of 10,000, the liability is to be only at 8,000. Prepare revaluation account, partners capital account, and the balance sheet of the new firm. So how do you want to go about it? So what we're going to do is we're going to approach them one by one, okay, and then resolve it. So we need to prepare the revaluation account, okay. We need to prepare the cash account. We need to prepare the balance sheet. And we also need to prepare the partner's capital account. I try and accommodate all the four of them within this page because that is going to make easier for you to understand this. So we have land and building. Is there an adjustment to this? Yes, it has to be appreciated by 30,000, right? So in the revaluation account, there's a gain because land and building has to be appreciated by 30,000. What is going to happen in the balance sheet is that the value of land and building will increase from the existing amount of 1 lakh and 30,000 will be added to it. So I'm just taking the combined number here. Machinery is 80,000. I'm just going to underline whatever we are completing. Machinery is to be depreciated by 10%. The value is 80,000, right? So how much will be the depreciation? 10% of 80,000 will be 8,000. So to machinery 8,000, it's a loss. The value of the machinery here will be 80,000 minus 8,000, 72,000. You have stock 1 lakh, right? So this adjustment is completed. Stock was overvalued by 20,000, which means instead of 1 lakh, the fair value of the stock is 1 lakh minus 20,000 because it's overvalued by 20,000. So the value will be 80,000. The entry for this will be made because it is a loss to stock account 20,000, right? Debtors 40,000. A provision of 5% is to be created for doubtful debts. So the value of the debtors will be 40,000 minus 2,000. That's 5%, 38,000, right? So debtors will be 38,000, and I will provide for to provision for bad and doubtful debts 2,000, right? Cash opening balance is 10,000, so I'm just gonna add this to balance brought down 10,000. And we're done with the debit side of the balance sheet, right? Let's go to the credit side. Capital account X and Y is 1,50,000 and 70,000. So we'll just put it as XY opening balance 1,50,000, 70,000, right? Now let's see this adjustment because it's pertaining to the capital account. Z will bring 1,20,000 as his capital and rupees 20,000 for his share of premium of goodwill. So if Z brings in 1,20,000 as capital, so the entry will be cash account debit to Z's capital 1,20,000, and his capital is going to come and sit in the balance sheet here 1,20,000, right? It's also said that he brings in rupees 20,000 for his share of goodwill. Now you don't know what the new ratio is, so you can't calculate the sacrificing ratio. In that case, the assumption is good that they sacrifice in the same ratio in which they were sharing profits and losses. Or in other words, this 20,000 should be distributed between X and Y in 3:2. So 3/5 for X and 2/5 for Y. By goodwill premium. Okay, how much would that be? It will be 3/5 of 20,000, which is 12,000 and 8,000 respectively, right? Then you go to the profit and loss account. Here the balance is 30,000. All the earlier reserves are to be transferred to the accounts of the partner whenever you are admitting a new partner. So 30,000 being the old profit will be distributed in the old profit sharing ratio of 3:2, which will be 3/5 for X and 2/5 for Y. Workman compensation reserve 10,000. Now if you look at this, it says the liability of the workman compensation reserve was determined to be 8,000. Now this is something which you should understand, and I'm going to pass an entry for this. In this case, what happens is you had a reserve of 10,000, right? But the liability is 8,000. So what we are going to do is we are going to transfer the amount from workman compensation reserve 10,000, which is available, to workman compensation liability. But that liability is only 8,000, which means that there is an excess reserve of 2,000. Whom does this belong to? It belongs to the partner. So we will credit this to X and Y in the ratio of 3:2, which will give them 1,200 and 800 respectively, right? So this goes off. What comes instead is the liability for 8,000 and credit to X and Y of 1,200 and 800 respectively. So workman compensation liability of 8,000 comes here. By workman compensation reserve 1,200 and 800 being the excess reserve will be passed here. Bills payable, sundry creditor 50 and 20,000. There's no adjustment here, so we're just going to write them as it is. Sundry creditors 50,000. Bills payable, how much was that? 20,000, right? There's one adjustment which is left, which is salary outstanding was rupees 5,000. So we are going to write, okay, we are running short of space over here, so I'll just write it here, salary outstanding 5,000. But since this is an additional loss which has been created, we are going to debit this to the revaluation account. Now after doing this, actually here you can mention salary, right? There's no adjustment which is left, so we're going to close the revaluation account, right? What do I have? 8, 20, 30, 35,000, 35,000. Now there's a loss of 5,000 in the revaluation account. This has to go to the partners X and Y in what ratio? In their past profit sharing ratio, which was 3:2. So 3,000 to X, 2,000 to Y. To revaluation account 3,000, 2,000, right? There's one more entry which we have missed out, which is that there was a premium for goodwill of 20,000 which was brought by Z. We didn't include it over here, right? So let's do the account balancing. Cash 150 is the debit, 150 is the credit. This will be balance carried down, which is going to go and come into the balance sheet, right? When I do the totals of the partners accounts, what do I get? 70, 78, 90. This is going to be 90,800, I guess, right? Minus 2,000, 88,800 is the balance which is going to get carried down. If I do the total here, 150, 162, 170, 180, 181, 200. So 181, 200, 178, 200 is the balance. Here again, I get 90,800. So the capital account of X and Y, the balances which are there are 178, 200, 88,800. If I do the total of all these three, what do I get? 1, 2, 3, 3 zeros, 1, 17, 7, 1 carry, 6, 18, 8, 1 carry, 3,87,000. Can we do the totals, please, and see if the answer that we have arrived at is correct? In this case, 130, 202, 282, 290, 320, 470 is what I get over here. Here, basically, again, if I see 5 and 8, 13, 387, 4 lakh, 470. So our balance sheets have actually tied up. While this is not necessarily an indication that things have been done right, but I hope these have been done rightly and you're able to understand them.